Welcome to the Lend Academy podcast, episode number 109. This is your host, Peter Renton, co-founder of Lendit and founder of Lend Academy. Today's episode is sponsored by Wonder Capital. They are an online investment platform that allows individual accredited investors as well as institutions to invest in commercial scale solar energy projects across the United States. You can earn up to 8.5% annually, and of course you're also investing in green energy, which is helping curb pollution and combating climate change. You can begin with as little as $1,000, and best of all, there are no investor fees. So if you're interested, go to www.wondercapital.com/lendacademy and you can find out more. Today on the show, we are covering a topic we've never really covered before, Insurtech, otherwise known as insurance technology. There are many parallels between Insurtech and online lending. Both have very entrenched incumbents. There's a lot of entrepreneurial activity with startups in the space taking on these incumbents and providing a better user experience, particularly to the younger generation. So I wanted to get an expert on the show. So I'm delighted to welcome Matthew Wong. He is a senior research analyst at CB Insights, and he's been covering Insurtech for some time. He's got one of the most widely read newsletters on the subject. And I wanted to get him on the show to talk about, what is Insurtech? Why is it really coming into prominence so much in the last year? What areas of insurance that these startups are focused on, what VCs are looking for, who are some of the interesting players, and what is really the outlook for the Insurtech space. It was a fascinating show. I hope you enjoy it. Welcome to the podcast, Matt.
Thank you for having me, Peter.
Okay, so I'd like to get these things started by giving the listeners a little bit of background about yourself. Tell us what you've done over your career to date.
Great. So I started, in journalism, actually, doing a bit of reporting on tech and venture capital and startups for a few publications, including Dow Jones and Inc. During that process, I had, come across a few reports from a little company called CB Insights looking at certain sort of markets, whether that was seed funding or education technology, which provided some great context into, obviously, the reporting I was doing, but also sort of spurred a deeper interest in me, regarding sort of, where markets were going within different areas of technology from a broader context. So, in reporting, you're typically writing about a company which raised, for example, Series A funding, and, there might be sort of 5 other articles about the same funding. But I was interested in the ability to use data and see, how that could sort of lend a hand into analyzing maybe where that company who had just raised funding fit into the ecosystem more broadly, where sort of their solutions or what they were trying to solve, fit in. So I've been at CB Insights for now several years. I help lead our research team here. I help sort of manage our financial services technology practice, and I also help manage a newsletter around everything covering insurance tech innovation. I've been doing that since fall of 2015. And now that newsletter reaches about 18,000 subscribers, mostly people involved in the industry itself, as well as investors and startups.
Mm-hmm. And I'll be sure to make a link to that in the show notes as well. So explain what CB Insights does. What is the business model for CB Insights?
So CB Insights is a data company. We provide, we're a SaaS company. We sell a data and analytics platform. And basically what we do is we track basically the private markets globally. We do that by, in part, algorithmically sort of gathering a lot of data, whether that's around investments, tracking press releases, SEC filings, sort of investor websites, but also sort of about, any type of metric we can gain on startups themselves. So we're looking at hiring data or sort of social metrics and sentiment, in terms of technology, now patents and others. So we're taking this sort of corpus of data, putting it on one platform and giving people the ability to analyze it. So, in terms of our customer base, we primarily serve corporations or major corporations, whether those are, innovation groups or venture teams, strategy functions. And then, smaller sort of base bars would be sort of venture investors as well as service providers like law firms, hedge funds, management consultants, and others.
Mm-hmm. Okay. So then I know you talked about your newsletter now that's become obviously very popular. How did you first become involved in Insurtech?
Sure. And by no means am I an expert in this space. This is something that, I think in 2015, we were at CB Insights. We do a lot of content. We do a lot of research here, and fintech has been obviously a big focus, for a long time, as you guys know at Lendit.
Mm-hmm.
I think, as we were thinking about sort of different offerings, we wanted to start sort of verticalizing, some of the newsletters that we put out and some of the content we put out. And when we looked at sort of financial services innovation or technology more broadly from a number of perspectives, whether that's where venture funding was going, whether that's what people were talking about, where startup formation was happening, we started to see a little bit of a shift. And this was, in 2015 or so. And I think it was for a number of reasons, right? I mean, so insurance was one area where there had been some companies already, Metromile, for example. There was, by that point, quite a few insurance aggregators who were also operating. And insurance innovation has been going, for a long time, right? Even back to the dot-com days, there were a plethora of insurance startups that, for the most part now cease to exist. But this is startup formation. The space has been going for a while. But I think there were a number of things that I think more recently had changed, which sort of was, helped enable sort of this growth now today that we see in insurance innovation. I can list some of those, but I think one was just, I think the insurance industry itself, there are some headwinds which are certainly impacting it. One is sort of obviously the interest rate environment, which affects sort of income for a lot of insurers. Because of that, it spurs a lot of insurance carriers to be more open or willing to different pilots, to different maybe experiments working with startups and finding ways to really refine their distribution channels. The other thing is, I think if you think about insurance as an industry, typically there's very few touch points with your insurance carrier. You sign up for a policy and typically, the next time you do that is when you are either, renewing or sort of paying a claim. So there's those few touch points mean there's a lot less customer loyalty and sort of the ability now with a lot of the technology startups now to really refine that customer experience. A few other things that I think is one, sort of the insurance industry, for example, you can make the argument that some of the products aren't really resonating with sort of demographic and psychographic profiles of today's buyers. You look at life insurance policies, for example, sold by year and significantly declined over the last 30 years. And for insurance carriers, their ability to innovate their products also takes a long time. There's been some studies that are put out. RGA, which is the Reinsurance Group of America, put a great study out recently looking at how long it takes insurers to create a new product. And, it's quite a long time. And it also suffers from gaps in sort of go to market and dissatisfaction within even their own sort of base of people who are selling those policies. So it's interesting to see a lot of these things, I think, percolating now over time. And obviously the other one is just sort of data sets that are now readily available that didn't exist 5-10 years ago. You think about, for example, in the P&C industry, geospatial imagery, which now there's a number of providers who provide that data, but the ability to use that and maybe directly integrate that into an area like homeowners insurance. These are all sort of exciting developments now. So that combination of data, sort of, industry-specific things, and then more sort of things related to insurance, whether that's lack of engagement, sort of changing buyer profiles. This is all sort of stirring up this, opportunity, I think, for startups to come in and really sort of, change where we see the insurance industry going.
Mm-hmm. I watched your Lendit presentation like just a few days ago again. And you talked about the declining insurance, for life insurance and others. And so I'm just curious, I'd like your personal opinion, actually. Do you think this is really a demographic shift from, with the millennials just not really focused on insurance, or do you think it's more of the insurance companies not providing products that millennials want or the younger generation wants, or is it a combination?
Well, I mean, I think, insurance is a fundamentally important product, whatever the age group you're in, and by nature, some insurance products are obviously required as well. I think what's changed is that as we saw in lending, insurance companies have sort of you can make the argument that insurance companies have sort of taken the ball off of some of the sort of individual products that, for millennials today, sort of one are used to sort of these different customer experiences, and two, there hasn't been as much attention on providing those customer experiences for some of these products that maybe today's generation now demands. I think, and this isn't just for individual consumers, you can make the argument that, small business segment, for example, as it pertains to commercial insurance, is a major opportunity today for insurance innovation where, companies who are maybe 3 to 5 people, and you can define sort of small business differently, but, that opportunity for commercial insurance and the ability to maybe turn that into a much more seamless process. It's a difficult problem. There's a number of questions that you need to ask a small business before you can properly underwrite them. But that, that is an opportunity to see what happened with auto insurance now with Geico, for example, and other carriers, and Progressive as well. And what happened there is a similar opportunity now we see in small commercial. So I think, there's a number of different, things that are, but I would say, I think just based on what we've seen in financial innovation in other categories, outside of insurance, now we're seeing that now move, over the last few years, a lot more companies, a lot more attention on sort of bringing that customer experience, bringing a better sort of product experience. And in some cases that does involve changing some of the underlying product, underwriting with some of these new data sources, sort of making that being a fundamental part of that new customer experience, not necessarily just moving things online.
Mm-hmm, mm-hmm. Sure. So, much has been said about how hot Insurtech is right now. And, for a while, like the lending space was really hot in 2014, 2015. And then it certainly cooled off from a VC or a funding perspective. And Insurtech is really taken off over the last 12 to 18 months. And so what do you see when you're looking at the deals being done, the VCs that have invested into the Insurtech space? What do they think they're looking for when it comes to investing in these Insurtech startups?
Sure. So, insurance obviously is a very broad industry, and within insurance, there's a lot of different lines of business where you're seeing insurance investment crop up. So, for example, we've seen more recently, maybe a few years ago, we saw a lot of innovation start in sort of the health insurance space. We saw obviously the Affordable Care Act was a big shift in sort of the health insurance experience. And out of that, we saw a lot of new companies, whether those are on sort of new consumer or employer brokerage models, or whether those are even new carriers like Oscar Insurance. So there was quite a bit of startup formation that came sort of directly out of that. More recently, I think the opportunity and where VCs are sort of looking are areas like life insurance, where there really has been a very few startups looking to tackle that sort of a massive industry like life insurance. We've seen a number of companies look to innovate also within the P&C industry, and a lot of venture investment interested in companies that are providing sort of, new insurance products within maybe the homeowner's experience or the renter's insurance experience. We've also seen that a big focus, as I mentioned, on the commercial side of things. So the whole notion of, whether we'll see a major shift in small commercial insurance, and it's still to be determined how much of a role startups will play in that. It could be, major efforts by firms like Berkshire Hathaway, given, what they did with Geico, or major carriers like Travelers or the Hartford or others. But regardless, that's a major opportunity to now bring sort of that whole process to a much more seamless experience for the small, commercial insurance industry, which, by some targets is as big as $80 billion as a market opportunity. So there's a lot of different areas of interest. And I think, we've seen a number of venture investors interested in those companies that will provide these new, insurance products and experiences and brands essentially to consumers and small businesses. We've also seen, a lot of B2B companies receive interest as well, as we've seen enabling technology become stronger. So companies who are providing, new tools, whether those are in the cyber insurance space or, as I mentioned, sort of helping make sense or analyze these new data sets and integrate those into the, insurance underwriting or claims experience. So, there's a lot of, and I think not to be sort of dismissed is just the amount of attention that actual insurance companies and reinsurers have now played and very quickly, taken up in this space. So if you look at the number of investments by, insurance companies and reinsurers, it was something like maybe a couple, one or two investments as of like 2012. And if you look at it now, it's probably close to 30 investments a quarter. So the industry is now very interested in finding and investing strategically into, both insurance technology as well as other complementary technologies, which will improve, their own companies as well, whether that's in smart home technology or roadside assistance apps or other areas. So, the industry itself is also investing in a lot of these companies as well.
Right. So can you name some names, that companies that are on your radar that you follow, that you think are interesting companies in Insurtech in this country?
Sure. So if you think about, selling insurance, for example, there's a number of ways to do that. As your startup, you can be, and there's been startups formed in each of these. So you can be, a broker and sort of broker insurance policies. You can partner with, a reinsurer, for example, as well as maybe a carrier to who has a license and take on more of what's called sort of a managing general agent role, where you take on much more of the experience or the value chain. Or you can obviously be a licensed carrier. Within those, I think, there's exciting companies in each of those categories. I think some of the companies that are within some of those spaces would be, for example, Lemonade is a licensed carrier selling online to renters and homeowners. Now just entered, I think there are now a few states, but that's an interesting approach, right? Because you now sort of be able to very quickly and more cheaply in some regards, provide renters insurance. It's an interesting market because, one, as a licensed carrier, insurance is heavily regulated. And as a carrier, especially to be able to move into new states, it's not a quick approach. This is not something that all happens overnight. But certainly, if you look at some of the numbers they put out, I think as I last saw, I think 14.3 thousand policies sold. You can make the argument that the thesis that new younger consumers are interested in new brands to basically buy insurance, it has been proven out that these new brands will make an impact over time. And it may take a long time. The typical venture cycle is maybe 7 to 8 years. Insurance, just by nature, maybe it'll take longer than that for some of these companies to develop into these venture scale businesses. But there's a lot of companies, a company called Ladder Life is innovating in the term life insurance space. Metromile, which has been around a little bit longer than maybe some of these other upstarts in the per mile space, is now also a licensed carrier after acquiring the carrier. And there are many others. There's been quite a bit of startup formation over the last few years.
And so, we've mainly talked about US companies so far in the US environment. Obviously, insurance is a very much a global industry. What are some of the other countries that you think are really doing some interesting things here when it comes to innovating in insurance?
Sure. So I've been very fascinated by the development of Zonan Insurance, which is sort of the first online only insurer in China. This is a company that was started in 2013. They started with an interesting product, a shipping returns insurance product that basically was meant to facilitate transaction volume on Alibaba's Taobao marketplace. So providing sort of merchants or buyers to get, free shipping returns. Since then, they've really expanded their business into a number of different areas, whether that's in travel insurance, health insurance, credit insurance, a number of different areas. And I think there are hundreds of products now. Since now the company is actually, in only just over 3 years now looking to file to go public. But I think the real lessons from this company and why it's so interesting is that, one, China as a market enables Zonan to do some really interesting things. So one, regulation for fintech in China is a bit, obviously very different than the US, where in some cases, you see regulators more open to allowing sort of some of these innovative models or subsectors to develop over time before sort of, enforcing what the eventual regulation will be. In the case of Zonan, for example, they were given a internet insurance license. They were sort of given a provisionary sort of internet insurance license to be able to operate, across China for a lot of their sort of innovative products. So I think that's interesting, being able to get to scale quickly. And then the other thing that's quite interesting that they've done is really integrate deeply into China's internet economy. So they have, I think, over 180 partners today. Those are companies like obviously Alibaba, companies like Ctrip, which is a leading travel agency in China, companies like Didi and ride hailing, and a number of Xiaomi, as the phone maker, and a number of others where their products. There's a great blog post by Alex Rampell, who's a general partner at Andreessen Horowitz, talks about inflection points for fintech companies where you find these moments in time where the product offering becomes most relevant. And I think ZhongAn is a very interesting example in that they deeply integrate into these platforms so that when you're buying, for example, a plane ticket, or when your phone gets cracked, or when you buy something on one of Alibaba's marketplaces, that offering becomes readily available. And ZhongAn has really taken advantage of that and been able to sort of establish themselves within sort of this growth of China's internet and e-commerce economy.
Yeah, I couldn't agree more. They're a fascinating company. I visited them in Shanghai, I think it was last year, and to me, they blew me away as just their use of data is so incredibly advanced. And just the products that they have, they're all these tiny little transactions they've got more customers, I think, than any Western insurance company has ever amassed. And they were started in 2013, and it's just it's a fascinating story. So then, I'm curious to hear what you've been seeing from the incumbent insurance companies, particularly in the US. We talked about some of they're doing more investments now in startups, but are you seeing a reaction from the incumbent insurance companies to this kind of surge in innovation that's really happened the last couple of years?
Yeah, so I think the incumbents have been very active in a number of regards. So whether that's investing in startups, whether that's even sort of building interesting sort of developments and some on the product side in some cases, as well as even acquiring some companies to sort of lead some of these new initiatives. So I'll give some examples of each. I think on the investing side, we've seen a number of new sort of corporate venture arms establish themselves within the insurance industry. I think when we look at corporate venture across a number of different industries, I don't think insurance is certainly probably the fastest growing area for corporate venture investment now that we've seen in terms of which industries we're seeing new corporate venture groups pop up. And then when you think about so those companies are investing in a number of, as I mentioned, sort of different both complementary technologies, but in some cases even some of these companies that we talk about. Lemonade, for example, has raised money from Excel, Catlin, as well as Allianz. We've seen a number of Metromile is backed by Intact in Canada, a big P&C carrier in Canada, as well as China Pacific and P&C carrier in China. So I think you see a lot of collaboration. And in some cases, these investments are also paired with obviously some partnership or collaboration with these startups. The other thing, just to mention on the investment side, I think Munich Re is quite an interesting case study in sort of what they've done very quickly. So, one, they're actively investing in startups through a venture group of theirs called Munich Re HSB Ventures, but they're also playing a key role for a lot of startups in the sense that they are also partnering with them to provide sort of balance sheet capacity for a lot of the companies who are operating as sort of these new managing general agencies, managing general underwriters. They're providing Munich Re's balance sheet as part of this partnership that they're working together with. Their partnership division, which I think is called the Munich Re Digital Partners, was started early last year, and since then it's something like well over 10 partners or 15 partners now that they're working with startups. So moving very fast in trying to figure out where things are going, what startups are working on, and in some cases both partnering and investing in those companies. So Next Insurance, for example, is a startup in the small business insurance space, both invested in by Munich Re as well as partnered with them. So you see these developments, not just sort of investment, but also a deeper collaboration in some cases. We've also seen some M&A, I think, by the carriers. Travelers, for example, made a very big acquisition in the UK of a company called Simply Business, also in the small business space. The idea there being that their team sort of aligned with where they saw this market going, and potentially will bring that to the US as well as Travelers looks to develop some of their maybe more direct capabilities. And we've also seen in some cases, interesting things with carriers looking to start new initiatives. Allstate, for example, launched an initiative a little while ago called Arity, in which they're looking to provide sort of analytics and sort of data product around, so to in some cases to other insurers as well around sort of telematics and sort of connected car technology. So it's there's a lot of things that are happening now. Some of the carriers definitely have been very engaged with the development in some cases, and in others, and I think in some cases some have been earlier than others, but some have been quite adept at sort of navigating what's happening and trying to work very closely with what's happening on the innovation side and also the startups.
Mm-hmm. So I want to just switch gears a little bit and talk about SoFi and what they've been doing, because it's been fascinating to me. They've partnered with an insurance company for life insurance, offering it to their members, and I'd like to get your take on that move, and if you expect like other fintech lending platforms like them, do you think this is going to be something that others do, or do you think SoFi is really a unique case?
That's a great question. So, as you mentioned, SoFi is working with a company called Protective Life, a life insurance carrier. And SoFi is, I think, a bit of a unique case in the sense that, as I alluded to earlier, they're capturing, and as you probably know better than I do, but they're capturing consumers at sort of very relevant point in time with student loan refinancing and such, and now have developed quite a big mortgage book and practice there, and being able to use their data and to understand when maybe their consumer, their membership base needs those needs. And as part of that, obviously now they've thought about insurance, and life insurance is one where it aligns also with certain moments in time that are quite interesting to them, and maybe as their membership base also, one gets married or gets a home, and so life insurance obviously becomes more relevant there. Protective is actually an interesting case study as well. They've developed quite a few partnerships, not just with SoFi, but even they also, I think, are the main partner for life insurance for Costco. So another area, if you go to Costco and get life insurance, Protective is there. I think we will see more partnerships in fintech and in Insurtech. So you're already seeing some in Europe, for example. N26 just partnered with Clark, which is an insurance startup, and I think you'll see more of this, whether that's on the wealth management side, where a product like robo-advisory naturally aligns with life insurance, whether you'll see this on and other areas as well. I think we'll continue to see, as we see more companies get to scale in fintech, their ability to now bundle a little bit more services, and we're already seeing that in some cases, both on the wealth management side and the lending side. I think we'll see that continue to grow over time.
Okay, so we're almost out of time, but I want to get your thoughts on this, on sort of the end game, or and obviously this is going to be evolving over decades, shall we say? But I mean, insurance companies, they're in a very strong position in many ways. There's a lot of very, very large players, and they have deep pockets, and as you say, they're investing in a lot of these companies. Don't you think that? Or do you think that eventually all of the successful, insurtech startups will be bought by one of these insurance companies?
I think it's very likely over time, as we think about sort of all the insurance startup formation that's happened, that we will see M&A. We've already seen some quick sort of acquisitions already, smaller acquisitions. But over time, yes, I would expect companies that, one, provide a product and a customer experience that is more relevant to today's generation, to obviously be very interesting to a lot of traditional carriers from the M&A side of things. But again, I think one thing that I think is different is that while interest in insurance tech really happened quite over time, and we had a venture investor recently say that this market's actually quite overheated, I think this is a much longer term development in terms of the impact that we see from a lot of what we're talking about today. So as I mentioned, I think, venture investors typically operate on maybe a 7 to 8 year time scale, but insurance businesses will take maybe, for the ones that are really sort of looking to develop product experiences and sort of, insurance products and selling insurance products that resonate, it will be, for very patient entrepreneurs. And this may take 10 years, may take 15 years for them to really develop into these major brands that maybe they aspire to be. I think, what that says for venture will be interesting as well. But over time, I think the industry there are certainly a lot of things with the insurance industry today that, that a lot of what we're seeing today has been great to do and spur not just a greater discussion, but a lot of initiatives by the industry to really focus more on the core insurance experience and sort of the product as well. So, over time, I would expect to see, M&A happen over time, but it will be a long time. And just to end on that, with a more concrete example, we talk a lot about all these small business insurance startups that are cropping up today. If you look at a firm like Hiscox, which is a carrier in the UK, but also sells small business insurance here in the US, for them to accrue, I think, $100 million in premiums, it took 7 or 8 years, and that's a carrier, a large company with a major, with all the resources to bear. So it took a long time for them, and I think for startups, especially, and a lot of the startups who are looking to sell small business insurance, for example, today are partnered with companies like Hiscox or other carriers. It'll take, a long time as well for them to develop into, these bigger players in the space. So, it's quite interesting that the industry is developing very quickly over time. A lot of new things happening, every day, every week. So, where this goes over the next 5-10 years, I think will be more interesting to track than maybe what's happening next week.
Right. Well, we'll have to leave it there. It's a fascinating conversation, Matt. I really appreciate you coming on the show today.
Thank you so much.
Okay. See ya.
Thanks.
So just following up from that last point that Matt made, where the time it's going to take to scale these insurance startups. I mean, that's one thing that is definitely different, I think, to the online lending space, particularly if you look at the consumer lending space, where you've had some companies like Marlette or SoFi or Avant who have really scaled very, very quickly to become some of the largest providers in the space in a matter of 2, 3, 4 years. So I think it's obviously not going to be that way in insurance, but I also think that it's an industry that is ripe for disruption, particularly when it comes to user experience. And so maybe we will see, I'd say, as fast a change in insurance when it comes to delivering the product to the end user. That may be the area where there really is rapid change. Anyway, on that note, I will sign off. I very much appreciate you listening, and I will catch you next time. Bye. This episode was brought to you by Wonder Capital. Invest in solar energy projects across the United States. Earn up to 8.5% with a $1,000 minimum investment. Their CEO, Brian Bursick, was on the Lend Academy podcast recently, episode number 104. And if you want to learn more, go to www.wondercapital.com/Lend Academy.